So can oil continue the stellar run that we saw through Q3?
Well, I would be careful about declaring the war like a victory for OPEC Plus and all other producers, because what we are seeing today is more a supply story. We have major OPEC Plus cuts that have influenced the markets tremendously and have shifted the balance in their favor. But there is still lots of questions around the demand side. China is a wild factor. The macroeconomic outlook is still uncertain. And although we do have positive signals so far, but we should remember the lagged effect between policy announcements and the impact on the market. That may take time to become visible. So it's a bit too early to say this is a direction we're going to continue to see towards the end of the year. But the signs so far, if OPEC holds its act together and maintain their cuts, then we're going to see maybe upward pressure, assuming positive signals on the demand side, especially from China and the US.
Do you think we're going to see oil ring the 100 USD bell through the fourth quarter?
Possible, but I don't know why we should focus on the 100. It's already a higher oil price than what we had, for example, last year, especially before we introduced the sanction. So 100 or 95, for me, it's the same.
Carole, lovely to meet you for the first time. Look, in terms of what could happen next, the Saudis know from history that if you push it too far, you create demand destruction. If you push it too far, you get a lot of competition coming in for investment, whether it be in fossil fuels, whether it be in renewables as well. There is a delicate mix to be negotiated here as well. Is there a danger that by creating this false supply constraint, or this supply constraint, that actually they're pushing it too far, they're keeping interest rates higher for longer, which is adding to that demand destruction, which is adding to recessionary indicators?
It is definitely possible, but we don't know what is that threshold that is going to cause a demand destruction. But also, I would say it complicates a little bit the job of the central bankers, because although high oil prices do not cause inflation, they contribute to inflation, to the upward pressure on prices. And as a result, we believe that the central bankers might going to stick to higher interest rate for longer. So having high oil price, irrespective of their impact on the demand, irrespective on the supply, as you said, Steve, quite rightly so, we do have the other important element, the monetary policy, the interest rate policy, and the impact on inflation.